Good morning, everyone, and welcome to the European Crossover webinar. And let's go and take a look over everything. I was up pretty late watching election return results, and probably explains a good reason why we're seeing the SPOOs close to their highs, or at the highs. Is we saw Biden make quite a gain on Super Tuesday. Looks like Sanders will get California, but surprisingly, not only did Biden catch a lot of the states, but he also won Texas. So that's made quite the big difference, big change in momentum. A lot of the concerns with Sanders winning, or the potential for that, went in. I'm looking at Texas, pretty big win of almost 70,000 on that, but really quite the big move here. Let's see here, but one moment. So that really certainly calmed down the S&Ps, because earlier in the evening when they saw Sanders with quick leads, we saw the SPOOs really go and take a dip. I was like, oh, God, you know what? You can trade the S&Ps just off of the election, returns as they were coming in. Let's actually, we'll go in and stop by and take a look at the SPOOs real quick. Okay, so we've seen the S&Ps come back quite a bit. You can see here, look at them on the highs as we move up. You can see here, obviously a lot to do with the surprise move that we've seen and how successful Biden was. Actually, Biden wins 9 states. Sanders wins 3 states, and then there's 2 that they say they're too close to call. But certainly ease the mind of the market overall. And let's go on and take a look also. And obviously, the big deal was the interest rate cut by the Fed during the market, which really ended up turned out to be basically like egg on the face of the Fed. Actually, the only thing more important than the Fed, which really didn't do anything, it's actually been the success of Biden that actually has saved the market, so to speak. Weaker. Actually, we're even weaker than we were when the cut was announced. I think when the cut was announced, I think we were at 30.53, and then obviously then it took off. Actually, look where we are now. We're still moving higher. So really, it's thanks to the movement seen here with I guess I should say, lack of being scared with Sanders stepping in. ECB says regular press conference after monetary policy governing meetings are not affected. I'm just looking here. With me. Go. And let's go and take a look real quickly to the gold market. Just a quick overview. Seriously speaking, if Sanders had done well, I think we'd be looking at a completely different market. And we're seeing gold come back. Obviously, when the SPOOs came under pressure, we saw gold weaken again, as it looked like one of the guys in the room pointed out, as the S&Ps came under pressure, and saying, hey, it looks like they're liquidating gold again. I thought, you know what, I didn't, at the time, I think gold was already down to 633 or 1633 or 1632. I say, oh my God, doggone, it is happening again, because the S&Ps were really coming unglued at the time, and gold really started to sell off. despite the strength that we were seeing in the morning. Post the cut. Let's go on and move back here into FX. And so we got German retail sales that have already come out, as well as Spanish services PMI, Italian PMI, French market service PMI, and composite, as well as with we had the German market services PMI and Eurozone, and these are final PMI numbers. All pretty much came in line overall, I suppose. We do have market services PMI final also in the UK at the bottom of the hour, as well as Eurozone retail sales at the top of this next hour. As we come into the States, we will have ADP. A lot of that's been lost on folks, forgetting that, yeah, we do have employment data at the end of the week, but boy, with everything that's been happening, nobody's had a chance to really think about that. We do have ISM manufacturing number. That's going to be out at 9 a.m. Eastern. Was the market composite final PMI, and ISM non-manufacturing at 10 a.m. And with that, let's just go on and touch off into the news. And from there, we'll roll into the analysis. I think we're all a little bit worn out after yesterday. So the dollar is downbeat as the Fed rate cuts bring more than worry than calm. The dollar hovered near the 5-month lows versus the yen on Wednesday after the Federal Reserve emergency 50 basis point rate cut sparked more anxiety about the impact of the coronavirus and sent Treasury yields tumbling to record lows. The greenback also traded near the lows in almost 2 years against the Swiss franc, with investors flocking to the trade in safe havens as rate cuts were deemed insufficient to offset risk posed by the global spread of the coronavirus. The euro was one of the currencies that benefit the most from the broad-based dollar weakness, as traders bet the Fed will cut rates more than the ECB. The disappointment that a Group of 7 statement on Tuesday did not lay out a specific response to a global slowdown caused by the coronavirus has reinforced the view among some investors that policymakers have fallen behind the curve. The G7 and the Fed were not enough to support markets, said Masafumi Yamamoto. The Fed rate cut is bad for the dollar yen, partly because Treasury yields are very, very low. The dollar's weakness reflected in the euro because the Fed will more likely ease than the ECB. The dollar fell to 106.85. The greenback bought to 95.66 Swiss francs. The rate cut failed to arrest the sell-off in U.S. equities and sent benchmark Treasury 10 yields crashing to a record low of 0.906. The new coronavirus that emerged in China late last year has spread to more than 60 countries and claimed more than 3,000 lives. Travel restrictions and factory closures aimed at halting the spread of the virus raise the risk of a global recession. Sentiment also took hit after the G7 finance ministers issued a statement on Tuesday that stopped short of calling for the new government spending or coordinated central bank interest rate cuts. In the onshore market, the yuan jumped to a 6-week high of 692.88. Let's see for here. And that's about it. Let's go on in one last story regarding the Aussie. So the Aussie dollar up on gross surprise and dive in U.S. yields. Australian dollar edged higher on Wednesday as surprisingly upbeat data provided a welcome dose of relief about the domestic economy, while an emergency cut in the United States weighed on the U.S. counterpart. The Aussie rallied up to 66.06, having ventured as far as 66.46. New Zealand dollar added 1/10 to 62.80. The Aussie got added help when the figures showed that the economy expanded at a faster than expected 0.5% in December quarter, lifting annual growth 2.2% overall. Yet investors are all too aware the brush fires and the coronavirus have set to hammer the activity this quarter, and they hit the services export and energy. Emerging disruption in supply chains, coupled with the earlier drag from the brush fires, will likely result in a contraction in Q1, and the risk of recession has increased materially, says Sarah Hunter. And I'm not going to waste any more time. Pretty much we already know of all the big news. So let's just go and take a look and do the analysis with the euro. Move on to FX. So the euro remains strong, testing beyond 112. The key is a close above 112 that can propel the pair to 1329. The pair is stretched, and a pause to 1095 followed by a support at 1086 is warranted. But we, like I said, we continue to remain well bid here. See. And let's go on and pull out the old. So we're still hugging here, and we still have the ability, if the S&P is further weakened and we spark these concerns and the dollar sells off, we still have the ability to push even higher. You can see here, look at today's range, which is so tight. Certainly looks like we can go on and even push even higher. I think for now we may take a bit of a pause here. We've come so far, and the only thing is it won't take much beyond here to squeeze people. If we get past these highs, I gotta think that there's quite a bevy of stops above that 1213. 1213. We're gonna go with the resistance coming in right here. We'll just go with the 1231. And on the downside, as we were mentioning, we can see the pair pulling back to 1095. Although that's still quite the move here, but that's we're going to go here with this 1095 for support. I think this market still has open to work somewhat lower here. But we're still keeping up that bid here, so we're going to still remain with this 1095. We just have not moved much, and look, I mean, anybody that's short this market, you know that they got to be chewing on their nails, because if we get past that 1213, we'll hit the stops. I mean, we probably get even beyond above 1231, but you know, if you're short, you just got to have your stops up in here, you know, right there to 1231, maybe even a little bit higher. And if they hit you, I mean, it's just going to spark this thing and make quite the run. Let's go and move into the cable. So cable's holding up well, masking or making a stand at 27.42. Resistance will be 28.84, followed by 29.30. Well, we're still holding here. And the break lower would take us down to 26.88. Same thing, just like the euro in a sense. We're in a very tight range, but the range we're in is even tighter right now. Look at this slight range right in here. So as I mentioned here, resistance on the upside is going to be 28.84. actually had 2882. We'll, you know what, we'll probably just leave the 20. We're not going to change it for 2 pips. And on the downside, 2668. So no changes here. But still a very, very tight range. Bears still remain, I mean, they're certainly in control after this push lower and beyond the breaking, securely below this pivot of 2980. Let's go and move into the Aussie dollar. So the Aussie continued to climb back post RBA. Resistance is going to be 66.26, followed by 66.78, and support is 65.34. Well, that 66.26, you can see that right there, still keeping itself in place, and we're going to stay or keep it right there with 66.26. And support at 65.34. We can probably work a little bit higher than that for right now as this market. Well, actually, yeah, that's not a bad idea right there, that 65.34. But I think, let's see here. The close here and almost there. It's going to be right there, 65.40. Well, no changes here in the Kiwi from yesterday. Although you can see here we're marred just like the same way the euro is, the cable is. We're marred in a very tight range here. So no changes here in the Kiwi. What we had on the upside was 63.07. You can see we're here at 62.88. On the upside, 63.07. On the downside, 62.05. So no changes here in the Kiwi. Let's go on and move on now to the dollar CAD. And with dollar CAD ahead of the Bacon County, which is expected to cut by 50 basis points, dollar CAD rallied back ahead of BOC's potential rate cut. Post the Fed cut, the BOC is expected to cut 50 basis points. Resistance will be 34.37, followed by 34.76. And support is 31.38, followed by 32.94. So 34.37, followed by 34.76. And on the downside, 33.18, followed by 32.94. And let's go on down to the dollar peso. The dollar peso rallied back to 1987. Well, actually, I don't know why I didn't say this here. For whatever reason, it didn't save my analysis, which I did from last night. But what I was saying here, I remember the analysis was that we had dipped all the way down here to 1915. Remember, when looking here thinking it was 16, it was 1915. So right now, the resistance is going to be 1951. You see right there. And I think we actually have to give a little bit more room, because if we do break lower, it's sort of going to jump back up. So we're going to go with 1958. And on the downside, 1923, the big pivot. Right here, the big pivot. With that, we'll go move on to dollar yen. And boy, do we have a big sell-off here. I mean, continued sell-off, obviously, with the runs that we've seen here in the equities markets, and we came off. And you wonder how much further can it get. And I'm wondering, hey, I just thought about this. Well, we haven't had that big of a. I think Biden's surprise, good showing, very good showing, including winning the Texas, has brought the S&Ps back. I think if we could get the S&Ps up to 3066, then I could say we're on a bit of a sugar high. And by the time the U.S. opens, we could probably come off about 20 handles. But we haven't got there yet. We're at 3050. I think we get to 3066. That's a good level. So I was just thinking about that. And that obviously would apply for the dollar yen here. So support here on the dollar yen is going to come in. Let's go right here. 672. And on the upside, and right there, 810. And let's go on to the and let's go and look at here at the cash dollar index. It says, well, the saying, as the saying goes, the wheels have come off the caboose is apropos with the dollar index. The low was just sub 97, although the level support overall 97.17 has held. Resistance is going to be 97.64, followed by the weekly pivot of 97.89. A break lower, find support at 96.71. So just in case we get this big break, even further, we'd be looking at 96.71. And on the upside, 97.61. And let's now go and move into the cross rates. Okay, and looking now with moving on to the Kiwi yen. Same thing, just consolidating gains. And I think with the yen pairs now, we can see them start to quiet down a bit. Now, obviously, with the dollar yen, potentially we could break even lower. But I think things have, after this big break, we're just consolidating moves right now. The upside is pretty clear. It's going to be 67.93, which is already what we had. And then on the downside, we had 67.16. You can see here we've tagged 67. We'll just go with the lows here for the day, which is going to be right there at basically called 67. It was a little bit lower than that, actually. Right there, 66.95. We're just going to go with that for those days lows. It's a very, very tight range. If we break lower, that could kick off, but I just don't really see. I see it's more consolidated at this point. And let's go on and move on to the euro yen. Of course, we've had this big up and down move. Look at this with the moves that we've seen, the euro versus the strength that we've seen here with the yen. It's just been a real tug and pull affair. And we're just going to keep it simple, going with the levels right in here, which is going to be 20.55 on the upside. We had it there already, 20.56. And we had 1976 on the downside. We did finally get below 1976. We can see here, we came here and got as low as what, 1942. We're going to stay within that as basically as if that were to work like a trigger. And I think that it could. That's going to be 1946 on the downside. And sort of had that big move here with the Aussie. Aussie's trying to fight back a little bit here. And as I said, the euro, what a heck of a move. I would expect a bit of a pause here. Let's go and take a look at a fib, see if we can get maybe a potential target it can move to. I think eventually we'll pull back down to 67.25. Maybe a stretch in here. Let's see if we can see something on a 2-hour chart. Right there, 68.05. Still pretty tight in here. And look, even here, because we consolidate and get even tighter and tighter. I'll tell you what, it's just going to go right here. It's going to be 68.38. And on the upside, it's going to be right there, 69.74. Let's go move on to the Euro Kiwi. Still holding up very well. A lot better. I'm going to say a lot better, but it's certainly still holding up even far better than what the Aussie dollar is. Once again, I wouldn't say relatively simple, but and we know that the euro can still advance, but we've had such a phenomenal run already. It's just going to be right here with today's highs, which is right there, 78.50. And on the downside, same thing, the lows for the last two days, 76.26. And still within a very, very tight range. Same thing I'm playing up to is the prior day's highs, which you're looking at here at 71.50. Are going to be the areas that may trigger a further move here. 71.50 and right here for the support, 70.21. Same thing here. We're consolidated here at these lows, and it's not that the analysis is simple. I mean, the markets have really gone through a rough and tumble move. Certainly, the yen pairs have woken up, and now we're just consolidating here. And I think at this point, it's just a matter of whether you can go on and trigger beyond these levels. Just like I said, the resistance is going to be right here, the previous day's high, right there. 38.57. And I think really right now it's about levels at this point. The market has really, and see, we had that from the day before, 38.57. The market has really taken a pretty good shift. Obviously, we had seen previously moves in Guppy, but many of these other pairs, you look at euro dollar, you weren't seeing these ranges here. We've seen a big shift in the potential where these markets can go and move to. Obviously, the euro has a potential, if it gets above 112, really going to clock some stops. And on the downside, I think we already had it. We down here had it at 37.37, but and which we're already down there. But right here is a trigger right there, which is going to be 36.60 for a trigger. SPOO's pushing up a little bit higher at the highs of the day at 30.53. Some good resistance at 30.66. We'll see what it does there. But once again, I think it's been good news, at least for those that are concerned of what a Sanders momentum streak can do and the potential worrying. That has come off, and we've seen the SPOOs, which I think when I was noticing that, I think it had gone as low as 30.12, I believe. Might have even been a little bit lower. And here we are at 30.52. So good 40 handles off that. But I think we may run into a little bit of a sugar high if we get up to about 30.66. We shall see. Let's go and move into the sterling odd. And we are pairing back here with the Aussie coming off of those lows. And that's going to come in right here at 92.33. And right there, 94.52. The opening, closing the opening, 94.52. Let's go and move in now to the SPOOs. So you can see here, there's 30.66 coming across here. And I think the market, and if you look at here, this little area is where they'd have to try and push a little bit higher, 30.70. And you see some good touches there. 36.6, but I think they might, a little bit of sugar high, try and push up maybe like 30.68. We're already seeing the market getting a little tired up in here. Just one heck of a move. We came down here to this 29.87 and dipped even lower than that. And we came back. Yeah, for those trying to be long the market, got to thank Joe Biden. Seriously, I'm not joking, because by those that have voted in the polls, it's really alarmed a lot of the rest, or restrained the alarm that we would have seen this morning had we seen a great night by Bernie. There's no doubt in my mind we'd be down here 29.42, and probably even trying to push even lower. So how far does that continue to stretch? That's what I'm saying is, if we take a look at the ranges here, we're at the 50% right now. And if you right there. $30.65. And you can see that coming right across here. And that may be where the sugar high takes us. So potentially we can get up here to this 30.65. And here's the little extra squeeze area here is 30.70, maybe even 30.72. But really that 65 to 72 is probably where we may see a bit of a stretch coming here. But like I said, if we do get a little bit of a pushing this and maybe a little bit of a sugar high on this, it may get us, like I said, I think between 30.65 to 30.71 is about as good as it gets here. We are, you can see here a little bit of a volume playing up in here in this 58 area here. Just a minor dip, but we still may get one more push up here. We'll see what happens. Let's go move into the gold market. We're still holding up pretty well. And the change of come off gold allowed it to go and move higher. Obviously, I think it's going to be a buy on dips. Those dips, as far as they get us to, right there, 1631. We almost made it there also. There we go. $16.31. And upside here. One moment. And let's go and take a look at the crude oil market. And looking here with crude oil. On a very short-term basis, right here. Right there. Short-term basis, 47.92. There we go, right here. 46.93. 47.93, just right there within that dollar range to trigger either up to downside. So that's what we have here. Crude oil, Spoo's moving higher right now, 30.60. We'll move into that real quickly. You see, just right when it looked like the market was kind of, look here. Okay, we're kind of pausing back now. Look at this, we jump right back up, and I think we may get that Biden sugar high. That may get us potentially as high as 30.71, but I do expect some pause around here between 30.65 to 30.71. Yeah. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.